acquisition, right? That system basically, took the shape of high cost of acquisition, the customers, low, very high churn rates, customers not being happy, and the changing brokerage firms all the time. And we had noticed that friction was prevalent in the market, but yet there was only one model. So if you had to engage, so there was this buoyancy of people trying to engage in the capital markets, and the capital markets had this small funnel where everybody should get through this, right? And so we had fundamentally thought that there was a different way to do this. That very idea that the firms were going to tell customers how they manage their money, how they interacted with their money, was something that we had bound to change. We had decided to change. Plus, at the same time, we had seen this kind of what we call as unbundling of the traditional vertical stacks occurring in other spaces. So we had seen that with Stripe, Patrick and the folks from Stripe were doing it, and Jeff and the folks were doing it at Twilio. And so, we felt like it was time for us to do it in the traditional brokerage space. Now, it took us a while because you're talking about a highly compliance-driven, FINRA-regulated, SEC-regulated market.
Yep.
So it takes you a while. And I always tell with most of the speaking engagements I do, is there's so much conversation about our APIs and how good and how we do billions of calls of APIs every day. But that's not what our innovation is. Our innovation is more around the fact of figuring out how to navigate through these in a compliant way. So yeah, so that's so what got me to think about this was the urge to just remove that friction that customers were facing, and
Yep.
we imagined a more unbundled, upside down world than the traditional markets did.
Yeah, that's one of the same trends that I noticed at Intrinio, right? We're more focused in the data space, but this unbundling has been slowly happening over the past couple of, almost a decade, really. In the past couple of years, it's accelerated, right? And I think largely driven by this new trend of retail investors. But in the data space, it's the same way, right? Like you guys integrate and work with a lot of data providers as well. But like paying for one Bloomberg terminal or one massive subscription and paying all these millions and millions of dollars, like retail investors aren't going to do that, right? Individual developers, quants, like they're not going to put up with that. And so it's like a necessity, like all the innovation coming out of, to counter that was a true necessity. And part of it is just access to capital markets, right? It has definitely opened. And so let's dive into that a little bit, moving on kind of from the unbundling trend into just retail investors in general, right? We have this, let's think a little bit through kind of like retail investors then, today, and tomorrow, right? Because it's been a wild ride. Everyone's familiar with like this GameStop Reddit explosion. There's all these tools out there now for investors, and it's, memes and meme stocks and all of the above, right? And that's where a lot of the focus is, and that's where a lot of the media attention is. But this really has been happening for quite some time now, this rise of the retail investor. So tell us a little bit of your perspective on where did retail investing, where did it used to be, where is it now, and kind of where do you see it in the future?
See, I think let's talk about the economy and where we are right now. I think it piggies back into the retail trend a little bit, right? See, right now, right? I mean, if anybody is looking for data and trying to figure out what the economic situation is, and you're just wasting your time. I mean, every day the opinion is changing, right? It seems like there's a stream of bad news that is coming out every day. Mm-hmm. And I've been very vocal about this. I've been very vocal about this more recently. Is that I feel like the Fed is almost irresponsibly trickling in interest rate hikes and almost creating a situation where they won't be able to manage inflation. But at the same time, the economy isn't just as bad. I mean, if you really go down to what's happening, right? It's not that bad. Employment still remains strong, right? Let's be honest about it. It still remains strong, right? If all of us who are hiring, come on, we can't figure out a way to hire people these days. So there's such scarcity and that's number one. And number two, the economy is still growing. It's not growing as much as it did last year, but it's still growing, right? Consumer is still very positive. I mean, the spending is still high, right? Retail spending is still high. People still have a lot of money they accumulated during the pandemic. They're still spending it, right? So this idea, the traditional idea that you can just keep on increasing interest rates, and as a result of it, you're going to control inflation is just doesn't apply. These are just this highly unusual situation. So the present retail market, the way I look at it, is this: it's larger, it's more volatile, it is much more internationalized than it ever was, right? And the traditional data-driven way of looking at these markets doesn't apply, right? So that's the state of the retail. So I expect the retail market today to continue to have, I expect interest rates trickle down to almost Q2 next year, maybe till end of Q1, depending on how much political will the government has. But I think they're going to trickle down. They're going to trickle it up and they're going to trickle it down again. And then, but I think inflation is going to stay high. So you are having a market today where retail consumers are very, very positive. Still, they're trading a lot, right? The market has a very interesting situation where people who are active and who know who have been through earlier market cycles are trading like there's no tomorrow. Options volumes and share volumes are still high. They're high because the active traders are trading more. The traditional small accounts have all tapered off, right? So you have this interesting thing in the market, but it's still a good retail flourishing market, and volatility and the Fed is really helping it with a lot of these interesting moves. But if you think about the market in the past, see, this whole thing started in 2016, right? Much driven by technology, much driven by a lot of education that has occurred in the market. From all the way from 2016 to 2022, we have added almost 27 million funded brokerage accounts in this country. If you think about 125, 130 million brokerage accounts in this country today, 25% of them just came in the last 5 years. You're talking about a 50-year history, of which 25% came in the last 5 years, right? Number one. Then you have the situation where when the pandemic hit in 2020, it forced a rapid graduation effect. I mean, people were forced to do nothing else but work on the capital markets for all reasons. And they got into a lot of these advanced trading and function. And that's the reason you see tremendous growth in options markets, right? Options markets have boomed massively, right? So, and roughly, we believe that roughly 50 million people had tried options within the first 2 months of opening a brokerage account, right? So traditionally, people used to open brokerage accounts 5 years later, they will do options, and now they're doing it on day 2, right? So you have a much larger market. And people who have gone through a rapid graduation effect because of the pandemic, and now you have volatility that's actually feeding some part of this activity. And so you have this very, very larger market than was before, a much more educated market than was before, new instrument than there had been before. And lastly, I think you have everything for them to actually feed and run off. So yeah, so I actually believe you're going to have this volatile, highly active retail markets for a little while. It'll taper off till maybe in 2023, later part 2023.
Yeah, you touched on something I want to drill down into a little bit, because it's all very good points, right? And one of the key things that you mentioned is just the sheer sophistication of this new class of investors, right? I mean, you mentioned options, right? At Intrinio, we sell a ton of options data. Of all the data packages that we have over the past year, I am telling you, people are buying options data like crazy. And we're seeing all these apps and these tools pop up. And people will ask me, they're like, you got individuals buying options data from you? Like, how are they? And I'm like, you would be wildly surprised at what they're doing with it, right? The apps that are getting built with this options data to teach people how to trade options, yes, but also to construct very complex options trading strategies. There's quant stuff going on. It is wildly surprising. And so it's an interesting theme, because that means us as people who are building for the retail market, we have to do things differently, right? It's like, this is a totally different animal that we're dealing with now. These individuals are sophisticated, and we're going to have to build differently for them. So what are your thoughts around that? Like, what, as fintech platforms that are building data and tools and brokerage services for this class of investors, what do we have to do differently now that they've really risen in their sophistication?
I think, yeah, very good question, right? I mean, if you take a look at it today, if you take a look at last month, there were more single stock option trades than the number of shares traded in the market. I mean, that's how large this thing has become. Now, to the question of how do we react to that changing landscape in the market, right? Data is key. At the end of the day, we as responsible fabrics that serve the space have to do a few things. I mean, number one is, first of all, we have to recognize the fact that they're more sophisticated than they are, right? And the world thinks they are. And I see it all the time, this idea that all these folks are, I'll comment on the meme stocks in a second. The idea that these guys are a part of Reddit groups and they're trading because they don't know what they're doing, right? It's just some application of a simple theory that doesn't make a lot of sense, right? Yeah. So, but in reality, I think what we have to do as good, responsible players serving this market is, number one, is we have to educate that market, number one. So we try to do our part in this way. We have a bunch of educational events, even running one tomorrow. So we do quite a bit of education. So we need to educate that retail space quite a bit and help them go through that journey, number one. And number two, we need to provide them good data. Good data is the key, right? Yeah. Good data is the key. How do you assemble, aggregate, and create data and deliver it to them in a way that they can consume it, right? Number two. Right. And lastly, and most importantly, which is very, very important, is that you need to do good by them. I mean, we have to be a responsible party. We have to get up in the morning and we need to serve them. And I think it has so less to do about profits and losses. I think it has so much more to do with basically giving them quality and doing it in a responsible fashion. So that's what we try to do. I mean, I'm sure you guys do exactly the same thing. Yeah. But that's what we do, is get up in the morning and the rest will come, right? I mean, we've been in the business, I do remember in 2013 when I said I'm going to build an API brokerage, API, what was the question, right? I mean, eventually, I went through a period where I was questioning if I'm even talking to sense to these guys, but eventually the market catches up with you. So we got lucky, I guess. But that being said, I think the way to serve these markets is I'll give you some interesting stats. 80% of our business today is options as a brokerage firm. 80% of our business is options, right? Number one. If you take a look at over 300 companies that have built, right, or built, you'll have a lot more people building traditional equity apps, but the majority of the volume comes from that 10% of who build these options apps, right? And those are growing in an interesting fashion. Yeah. And lastly, and most importantly, is very interesting stat is these folks require more education and as a way for us to offset the amount of time we spend on support. We've been doing quite a bit of that kind of an approach. It's an interesting landscape. It's a totally different things. Yeah. Now you're combining, cryptos and options, combine futures and options, and so this is going to be an interesting melting pot very soon.
It sure is. It's more like the 90-10 rule when it comes to options data and everything else, right? You touched on some great points, right? We have the same thing. We sell data to businesses that are building apps for retail traders, right? But right. So we get to see what they're building and how they're interfacing with these investors. Education is huge, right? Content strategies and videos and tutorials and all of this information that you have to push out there is a new paradigm for fintech companies, right? Because historically, being B2B, there isn't a whole lot of that. And there's this whole social education aspect, which is brand new. And you mentioned support. Support is huge for these types of users as well. You have to take good care of them. And also another thing that we talk about a lot at Intrinio is user experience, right? Like these clunky, archaic, old brokerage platforms and these, difficult to get started, difficult to use, difficult to even try to talk to a human or find somebody or get a question answered. Like, it's just got to be easier, right? There's this expectation among this new class of investors that things are going to be modern and sleek and simple. Right. And it's interesting, right? Like, I'd love to see, I don't know the stat on this, but like front end designer like hirings at some of these firms, right? Because like there's a need to prioritize that. It has to be pretty. It has to be easy. It's just it's an expectation of this new class of investors. And so I think the companies that are building for retail that ignore that and don't pay attention to user experience, user interface are in for a rough ride, because that's another key aspect here as well.
No, I agree. I'll tell you one interesting that we see, right? Is and I'll tell you an interesting stat. We took a poll of roughly around 5,000 active traders, right? And we federal active recently, it's about 6 months ago, and we said, how many of you folks actually trade from the platforms of a brokerage firm alone, and you don't trade anywhere else? 82% said they rely on third-party platforms to create their trading ideas and just use the brokers to execute a trade. That's, I mean, and that tells me that's a fundamental shift, and that explains why you see hundreds and if not thousands of these platforms that are being created in the market. Each come at the market through a different way, different idea, different sense, different automation, different aggregation, right? But the fact that, the fact that so many of these tools are being created, I'm sure you guys serve them, by providing the data, and they are all basically now their primary way they decide on what to do with the market is not the traditional brokerage. So for me, my idea that the traditional brokerage firm is going to be unbundled is front and center right now, where people are just doing, and it's happening more and more on the traditional, more active trading. People who are trade more than 6 times, more than 10 times a month. Yeah, that's where the main unbundling effect is occurring. But I think it'll creep up to the people who trade less than 3 times market.
Totally agree. Another thing that you mentioned too is how important data is, which is great because I love to talk about data. That's what I talk about all day long. But what's interesting is you've got all of these traditional players in that space, like the Bloombergs of the world, and frankly, even the exchanges who we work with, but who charge really high fees, right? And they're self-regulated and they're able to charge whatever they want, and it's relatively inaccessible to a lot of retail investors. That's some of the stuff we're trying to build against at Intrinio, right? Is to unlock some of that data and make it more accessible, because to your point, that's the underbelly of everything. If you don't have the data, you're not investing, right? Nothing happens. Everything grinds to a halt if there is not data. It is the foundation. And so what do you think about that space, right? Like, where do you see that going? I mean, obviously companies like Intrinio are popping up that are trying to make this more affordable. But at the end of the day, like, if you want to stream real-time options, how expensive that is, right? Like, it's really not that accessible. And obviously the role of fintechs, right, like yourself, to integrate and display that data, they kind of take on a lot of that risk and a lot of that pricing to be able to display that data. But if you're a sophisticated, technical individual investor that wants to stream that data on your own, not look at it inside of an app, it's really, really still an inaccessible side of the market. And so I think it's great you guys are integrating it. Companies like Intrinio are helping, but there's still a lot of problems with unlocking data in that space.
Yeah, and I think how I see that market basically happening, right? I still think that infrastructure provision for that last mile, where they build their own last mile, right? I still think it's fragmented right now. I think you have, and I see a little bit consolidation occurring in that space, because builders are looking for one-stop building, right? And they're looking for one location where they go and they build everything, right? So that is forcing a lot. That is going to force that very demand that I want one-stop shop for my data, for my execution, for my custody, for my risk and everything, right? So I see that that demand for one-stop interaction from these third-party platforms, right, is basically going to drive some part of how this market basically. So I do see, I do see firms basically, crossing over into each other's space. There is not the traditional market data providers, the brokerage firms, and software providers. I think in a cloud kind of a tiered architecture where just the last mile is being handled by somebody. So I expect these infrastructures to coalesce or partner and stuff like that. So, but that being said, I think that trend of actually, two things are happening in the market. One interesting data point that's occurring in the market is the internationalization of the US brokerage market, right? We're coming to a space where, I was in India a couple of days ago. I'm now here, where there's a tremendous amount of demand internationally to access the US markets. The most reliable, betting on the dollar is a much more better bet than you can take anywhere. So so that market, I see consolidation. I see a lot of, international platforms serving both the domestic and the international market. So huge, massive growth. I was at an event yesterday, huge, massive growth of third-party platforms. Mostly it comes from the context of accessing the US market, but it's just more than that. I mean, they're actually just not accessing it. They're providing newer ways to, approach the market in the traditional US retail lid. So I see internationalization being a huge growth factor for those segments, for these infrastructure providers. And lastly, and most importantly, I think what would be super, super interesting to do is to basically understand that that there's new asset classes that will actually become even more crucial today, right? And obviously we go equity, we saw options. I still see crypto becoming a very large player in the space. I mean, right now you're going through, I'm stuck at 20,000 problem, but I actually think when interest rates drama goes away, I think crypto is going to take a bump.
Yeah, let's wait on that one because I want to dive into that in a second. But we did have a question pop up. And just as a reminder for everybody on the call, there is a Q&A button towards the bottom. So if you guys have questions that pop into your head for us, drop them in there. And if we have time, we'll try to answer them as we go along. So this question came from Stephen Orr. Stephen is with money.net. Welcome, Stephen. Thanks for joining us. So Stephen's question was that, while we're still on the topic of options, right, before we close that chapter and move on, the issue is that 40 to 50% of option volume is traded 0 days to expiration within ETFs. Options were never intended for this type of trading. Do we think this is going to continue? Great answer, Dan. Thoughts?
No, I mean, I think yes. I mean, I think it was never intended for that. I think you're in the short run. I would say you're still going to see a lot of that. If you not that there's a CBO event tomorrow. I think Henry Schwartz is speaking at it. If you Google it, you'll find out. I mean, one of the biggest things is, ETF options is the fastest growing segment too, right? So till last year it was single stock options, and right now it's ETF based options. So yeah, I mean, I expect that trend to continue. And I know there's some pros and cons, but really mostly the cons is more around how prepared are the retail brokerage firms for that. So for that kind of mostly around the user experience, are there enough products to serve that space? But yeah, I expect that to continue for a while at least.
Yeah, I agree. It's a new ball game today. But great question, Stephen. Thank you. Okay, now let's dive into crypto. Let's move on from options a little bit, because this is, we're here today to talk about retail investors, right? How to build for them, what to do, what not to do, this new trend of retail investors. You can't get away from this question, right? It's everywhere right now. Everybody's talking about it. Yeah, the market is a little bit of a disaster in the crypto space, but most people view that as an opportunity because they think we're past the point of no return and this isn't going away, right? So is crypto here to stay for the retail investor, right? Dan, what are your thoughts? What are you seeing in the market? Are people experiencing their first bear market here like this and they're freaking out? Or do you think retail and crypto are going to be a pair long into the future?
Yeah, I'm very bullish on crypto. I mean, I'm very bullish on crypto because it having spent almost close to 18 years in the space, the pulse of transparency and the want to be in front of something, it serves that essential retail sentiment. So I expect crypto to have a huge play. Now, I think the problem you see with the retail right now, it's not the game, it's the players who actually created so much of the problem recently, right? And I'm blunt to say that. It is a lot of over enthusiasm and to some extent even trying to run ahead of each other. That mad rush race to do something has actually created a set of problems that has actually tainted some of the confidence on it. But I expect retail to basically continue to be bullish on crypto, number one. And we did a survey recently that told us exactly that, number one. And number two is the other thing that people are talking about, that people are not talking about, is you're still at the early stage. The volumes of the traditional equity compared to retail is like small, right? I mean, compared to the retail, it's just small. So I think once the active trading community, so see, the US market roughly has around 115 to 120 million retail brokerage accounts, okay? Out of that market, about 60 million people of them trade more than average three times a month. More than average 3 times a month. There are about 10 million of them who trade more than 10 times a month, right? And then you have half of them who trade less than 3 times a month, okay? The most of the activity is around these first-time early stage investors who have jumped into the crypto market. And sometimes there is more noise than reality, and then you've got it's a lack of enough volume in that market that has created a situation where tweeting by some known or unknown characters can actually create a fluctuation. And I can take a look at it and find fault in everybody who tweeted about it. But the reality is the fact that when you're dealing with so small volumes. But I think what is happening, I see a trend where active retail traders are first time getting into crypto. They've still not got into crypto.
Yeah.
That community of people who trade more than 3 times, who trade more than 10 times, have still not adopted crypto into their strategy, in spite of all the noise, right? So, and I expect that to happen. And for them, the trigger of them getting involved is largely around regulation, right? Yeah. I always said this: regulation is the absolute best thing that can happen to crypto, right? It kind of takes it away because it brings these traditional, very, very sophisticated active trading community in. So I see the convergence of more regulation. I think the government has basically kind of spoken a little bit about directionally how they think about regulation.
Mm-hmm.
You'll see the policy being created in 2023. Plus, at the same time, you see these active traders getting into crypto for the first time. That will increase volumes. It'll make it more of a reliable security. And so just based on what I see in the ground, very positive about crypto. And I think the focus of crypto is going to change from 500 coins or 500 assets in that category to a much smaller subset that will define 90% of the volume. I see that happen.
Right. I agree. I mean, we're past the inflection point, I think, on the Gartner hype cycle, where it's really, there are true applications that are starting to surface, and that's when it starts to get sticky and it's not really going to go anywhere. As you mentioned, right, sometimes regulation is good. In this case, it honestly really is, but I don't think it's necessarily the only hurdle from like true mass adoption in the retail space. I think education is another big one, right? Like setting up a MetaMask wallet is a nightmare, right? For like the average person who's not that technical, like getting into finance, doesn't know a lot about technology or finance, setting up even a Coinbase account, understanding how the exchanges work, cold storage, any of this stuff, it's a mountain to climb, right? And so it's interesting, you see all these YouTubers popping up, all this education, and we're getting there, but it's relatively well known that you can set up a brokerage account and buy a stock. But getting into crypto is just a different beast. I think it requires a whole level of sophistication and education that we haven't seen yet either. So it comes right back to that piece of education again, right? I think that's going to be huge.
Yeah, agree. I mean, and I think regulation is going to drive that education. I see I think what happens generally in this space is, I've been in the cycle when options were new. I mean, this conversation we're having with crypto, we were having 14, 13 years ago, we were having it around options. And people would think there was time on the market where, options was at that point of time much more related to, almost irresponsible behavior by traders, right? So you have that curve come in. As the number of people grow into that, right, and regulation comes in, regulation legitimizes it, it creates education, and we spoke about active traders getting in. So I think all that is good, and I think we have a far too aggressive. I was at a conference in Miami, right, and and I heard the whole conference was crypto is a hedge against recession. I said, come on, man, you're talking, it's never going to be the case. I mean, right now, the crypto seems to go right along where the market goes, right? So I think sometimes this idea that when we talk about crypto, we think of it as like a one-stroke solution for everything, kind of sets a different expectations for people. But I think if you apply the traditional stack, I think it's going to be as simple and straightforward. So.
Yeah, that's a great point. While we're on the topic of crypto, I'd like to switch a little bit and move on to like blockchain and trading a little. So I know, Dan, I moderated a panel at a fintech conference in Barbados a few weeks ago. I was dying to get Dan on my panel because he has such an important perspective from the point of view of a brokerage style company, right? And the question that I asked on this panel is, when we start trading traditional assets on a blockchain, right? Not talking about crypto, but like stocks, bonds, things like that. If we were to trade traditional assets on a blockchain, in theory, the blockchain completely serves the entire purpose of the exchange, the broker, the custodian bank, the clearinghouse, and frankly, the data provider, right? That's becomes the source of the pricing data on a long enough time scale. And I wanted to tear that apart because it's easy to tear apart, but I do think it's an important question, right? Is what are these stock exchanges going to do if trading is happening off exchange on a blockchain? And obviously part of this is going to be regulation focused, right? But Dan we chatted about this before the panel. I wanted to get his perspective. So Dan, will you share a little bit about your thoughts around that?
We thought around how blockchain is going to change the way markets function. This is probably
like if is it realistic to think that if people start trading stocks on a blockchain that we don't need brokers anymore? We don't need exchanges. We don't need, like, the blockchain is the source of it has custody over the asset. We don't need custodian banks. Like, we don't need any of these traditional players anymore, in theory.
No, I mean, you see, this is what's going to happen, right? And sometimes I think this is where I call it, I can't help myself moment of thinking about stuff, because as entrepreneurs, we at some point in time, there's a problem needs a solution, and sometimes the solution starts looking for a problem somewhere in that curve, right?
Yeah.
See, at the end of the day, I think the stack is going to get reset, right? The stack of what is an exchange, what is a clearing firm, and even how the exchanges and market data providers play into it, the custody level, the regulation, all that is going to change. The stack will be restacked, right?
I love that. Resetting the stack.
Right. So the stack is going to get reset, but I think we are probably a decade away from that. And the reason, and a decade away from that. And the reason is because innovation is incremental, right? Innovation is incremental. It in most cases, if you it sounds like a sweeping, but it's not. It's always incremental if you really start thinking about it.
Yeah.
And for example, if you take, let's go up the investing spike, right? At the end of the day, you have a retail investor, right? You have a retail investor. He can invest in two ways. He can invest by himself or seek an advisor, right?
Mm-hmm.
And they have to be underwritten for the risk and protected by a broker dealer. So far, we're not even talking about technology. These are all regulations, right? Purely to protect the customer. There's an end customer, there is an advisor or a self-directed platform, and there is a broker dealer, right? Nothing to do with technology. It is that will not change, right? At the end of the day, the government needs to hold someone accountable to protect the end customer, right? So there has to be that layer of a.
And you don't think that blockchain technology will naturally protect
the blockchain technology for a long time, right? For a long time, it will not, because at the end of the day, and you are going to that part of the stack is going to have a slow, incremental impact as education. The stack that occurs behind that broker dealer, right? If you think about the exchanges, the settlement of the trade, the market making, the clearing, right?
Yeah.
That I see a much more drastic, quick impact of blockchain, right?
Yeah.
Where I saw, so stack gets simplified tremendously, right? It's this traditional 4-layer structure where there's exchanges and market makers. In front of that, there is clearing firms, there is data providers and exchanges, and there is brokerage technology like the one we provide, right? All that is going to basically get, what I call as consolidated, if we use a very common term, since you're dealing with that, right? That's what it's going to happen.
Yeah, I think you're absolutely right. We're kind of agreeing that, like, in theory, on a long enough time frame, blockchain could make people feel safe. It could be secure. It could check all these boxes that regulators want it to check. But we're quite a ways from that, and it's going to happen incrementally. And I agree that the traditional institutions that are most at risk are the custodian banks and the clearinghouses in the nearest term, right? But that's not a light statement to make. We're talking about billions and billions of dollars, massive traditional, financial institutions. And it's going to be interesting to see how they respond, right? In the exchange space, you see NASDAQ starting to get into, the crypto space, and they're working on it a little bit, and other exchanges are getting there. What's interesting is down in Barbados, these tiny markets, this tiny stock exchange, they're fighting to make a name for themselves, right? And they're opening their doors wide to all the blockchain companies. It's going to be interesting to see what happens there, because those smaller markets are more willing to adopt technology, and they might be small, but they're going to usurp everybody else in terms of innovation because of that, which is going to be interesting to see. I think you're right. I agree with you. It's going to be a long time, but there's some markets and some big institutions that are threatened in the short term. Thinking about Tradier and the innovation and technology you guys are doing, brokerage, I think, is going to be the last one to be affected. You still need, like, that comfort on the front end of the broker position, right? Especially with the retail.
No, I mean, it's going to impact us too, right? It's going to impact us because we are in the business of abstracting that complexity and delivering it, and so. I think there is so much all the way from how quickly a trade gets settled to how responsive the whole investment stack becomes. All that will impact this, right?
Right.
And portfolio. So I think it's all positive. I think blockchain will have a tremendous positive impact on the way I think the services are consumed and delivered. But I think the other but I think it'll take time. I mean, I think it'll be incremental, because you understand that the investing stack is actually layers and layers built upon regulations, right? And holding people to those layers is how it's built. So the restacking will take time. It'll be incremental, but I think it'll happen. So.
Yeah, I think we coined a new phrase today that I love that we both can use: resetting the stack. I like that. So we'll leave it with that. So we have a couple of questions that came in. We can maybe fire through really quick. The first was, does inflation affect crypto in any way? Did we just lose Dan? I think we might have lost him. Well, technical difficulties. We will give him a second to rejoin us here. He might have lost his connection. Megan, will you shoot him a quick email just to see if he's able to pop back in?
Yes.
Thank you. We were just getting to the good stuff. Please bear with us for just a moment while we try to retrieve Dan. We will give him just a few more minutes to see if he can reestablish his connection so we can finish our convo. But if he doesn't make it back in a few minutes, I will cut this short. You guys can take the rest of your lunch break back. So bear with us for a few more minutes. Thanks, guys. See, Michael Rains from Wall Street Horizon has joined us. Thanks for being here.
Rach, he said he is trying to get back in, so.
All right, we will wait for him. Still got 15 minutes. We can still cover some more stuff when he gets back. Hey, Dan, welcome back.
I don't know what the hell happened, so sorry.
It's all right. Technology can evade us sometimes. Totally understand. So we were just in the process before you dropped off of tackling a couple of these questions that came in. We might be able to fire through these pretty quick and get back to our convo. But does inflation affect crypto in any way? This is a great question, right? You just got done explaining, like, we've really actually seen like a complete correlation so far between the traditional equity markets and crypto. But thoughts on that, Dan?
No, I think it does, right? I really think it. I mean, you are seeing it right now, right? I mean, at the end of the day, if the fear of inflation is actually causing crypto, I truly think if you talk about if you're watching Bitcoin, and I was saying it's stuck at the 20,000 problem, right? In spite of all the excitement, maybe it's some of it is driven by traditional thing about I truly believe that once the retail markets basically at the end of the day, it's a retail trader. It's a retail trader. It's the same trader that's trading equity. It's the same trader that's trading crypto. They're all coming together. They are the guys or the folks who are actually going to define what the sentiment around that is.
Yeah.
So yeah, I mean, at the end of the day, if the fact that they have a positive, people either have a positive sentiment of investing or they don't, right? So I think, I certainly don't think, I think it'll always travel maybe in a different sequence, but it'll travel very similar to what the retail sentiment around investing is.
Right.
Investing will never just include equity, right? In driving force. So I expect, I do expect, what I call as inflation, the conversations about recession, everything. I mean, I actually think crypto is at the end of the day, right? As more active traders get into it, it's going to follow the same market cycles that the traditional equity and options market or the traditional investing listed securities play in. So I do see it being impacted in the same way that traditional securities are.
And that's definitely what we've seen so far too. So great answer. One more quick question from the audience, and then we'll get back to the retail conversation. This question was around international regulation, right? And the differences in the US. And I know, Dan, you guys work internationally. So do we. We're in 50 plus different countries. What the question is, do you think regulation from the US is the only one that matters? Like, what about other countries? Crypto is becoming big, but there isn't a lot of positive news internationally on regulation. And so maybe some perspective from you on that regulatory environment internationally.
Yeah, I mean, I'd see to me sometimes where are people more bullish about, what I call crypto changes depending on what kind of a news we hear. Yeah. But yeah, I think for example, I truly believe something like an Indian market that with such a large population, such a young under 35 population the country even does not have a traditional listed securities market like the size we have in the US. I mean, for those folks, getting into crypto and the policies of those countries towards crypto as they ease out is going to have a tremendous impact on the pricing and the way it's consumed. Now, that obviously puts regulation right in the mix. Yeah, so I think, the size of the investing market, of how large the US market is today, things are going to change, right? Things are going to take a different shape over time. But today, how large the self-directed investing market in the US is, the US regulation is going to be the primary driver of how all this plays out, right? As these countries try to adopt, and what happens to dollar as a currency internationally plays out, and whether the crypto can have a role to play in that offset or not, is going to define, and the regulation. So I do see international regulations having an impact on crypto, but not anything material to the extent like the traditional US securities is going to take a look at it. So yes, and I expect that to happen in 2023. I really expect that to happen in 2023, not because of whether the Democrats come to power or the Republicans come to power, because I just don't think the government has an option. Yeah.
The power of the retail market is reaching a fever pitch. So I totally agree. And let's get back to that. Let's get back to talking a little bit more about the retail market, right? And we're talking about how to build for them, what to do, what not to do. And APIs have been mentioned a couple of times. My business is based off of APIs. Your business is based off of APIs. You mentioned Stripe, right? Very powerful, very successful API business. And I recorded a video about this recently about, becoming the Stripe of financial data. In a sense, you're becoming the Stripe of brokerage for retail, right? And the role of APIs is huge. It's nerdy, it's technical, it's not sexy, but it is really the infrastructure holding everything up. And it is the technology, in my opinion, that has unlocked this world of investing for retail traders. So tell us a little bit about your thoughts on APIs and how their role in this retail revolution.
Yeah, see, at the end of the day, by definition, what APIs do is they basically abstract out complexity, right? And they make it consumable. And so the repercussion of that is the fact that it enables somebody to produce something in a rapid fashion without having to worry about what happens behind that layer. Right. So, I mean, at the end of the day, right, this is how, in fact, a couple of years ago, I wrote an article about is APIs the new UI, right? So, so APIs are another way to distribute services. At the end of the day, they're another way to distribute services where you don't where you don't have to control what happens in the last mile. And so for me, APIs are going to play a huge role in this segment, primarily because at the end of the day, it enables an evolving last mile, an evolving retail customer to do to seek out and aspire, and for entrepreneurs to build what exactly they need than a one-size-fits-all traditional white label slash apps and browser approach. So yeah, so I actually think APIs. I've come to a point where no firm cannot offer an API offering. It's just not, that world has so far is so far. I mean, I just cannot imagine anybody who's not offering APIs, right? So it starts off with saying it either starts off saying partners asking for services where they don't have to fit into a box, and the companies have to produce APIs, or it starts off as producing APIs for internal, cross-foundational interaction, and then eventually it finds the reasons for where they can expose it outside. So APIs are going to be huge. I mean, it is going to be, it basically drives cross-border, cross-format, cross-protocol, and rapid integration. So I expect APIs to be huge. I mean, in fact, I see, I actually see the next generation of APIs in GraphQL and stuff like that, actually even replacing the way APIs are functioning today, or maybe the way APIs are consumed today. So I expect a lot of, we're trying to do a little bit in that, and we might be a little bit too ahead of the market at this time of that. But still, I think, APIs are going to be the primary way by which every firm will have another way to deliver their services. For us, I think in this space, I think you're going to see, you're going to see what I call as APIs start offering more advanced functionality than they have done so far. For example, if you think about the traditional trading side, you'll see APIs actually almost offering, what I call as more, not request response and stream, but business processes are going to be consumed and offered and delivered through APIs, and API is the consumption point, but there's human beings behind it. And I see it, so I see the business process as a service-based API is becoming more and more popular. So yeah, so I mean, APIs is going to be the de facto way by which data and consumption is going to occur.
Right. Yeah. Sometimes it's almost worse to be ahead than it is to be behind. Right. I think both of us, being API first businesses, I think have dealt with that, but the market is catching up now, right? And I think you made a good point about not having to worry about the last mile, and that is the definition of the value of the API, right? And it's like, don't underestimate the sophistication of these new investors. They know how to use APIs, right? They know what they're doing. And now they can get all the financial data they need through an Intrinio API. They can get all of the brokerage services they need through Tradier API. They're off and working and running on their own. And I think a lot of these traditional institutions that haven't been API first, the Bloombergs of the world, right? They have one, but they don't prioritize this market. They don't care about it. They're in for a surprise, right? Because these quants, these retail traders, these engineers, this new class of retail traders, they're fine if you throw an API and some API keys and some documentation at them, and you are going to be wildly surprised at what they build, right? Like, they're building awesome tools, awesome strategies, incredibly sophisticated algorithms. It's wild, and it comes back to that unlocking of information, unlocking of data, unlocking of services, unlocking of APIs, education thrown over the whole top of it, and you've got a very sophisticated new market of retail traders building and innovating. So I agree, but the APIs are the things that kind of.
I think the challenge that I think the learning curve that folks like us, folks offering APIs, have yet to master, is the idea of how to effectively, play the role of an enabler where your customer is your product, right? And so how do you effectively, so the challenge, I think, we have kind of evolved to a point where I think we figured it out, but I'm not totally sure yet. Only time is going to answer it. But the idea that how as an enabler you can engage a marketplace to actually produce product in conjunction with you. I mean, for example, today, 50% of the functionality that's get delivered by Tradier is not actually built and offered by traders. It's built on top of APIs, built on top of APIs, built on top of APIs and third-party services. So I think the challenge, the mastery that needs to be created in this space right now is how do you evolve from being an API offering to an enabling player in that marketplace. I think so. That's the evolution. I think that'll actually go ahead and serve these customers a little better. So I think that's the science that we're all trying to figure out at certain scale. I think the moment you touch like a few hundred partners, I mean, you're going to get into the space of not how to offer functionality, but how to have the ecosystem deliver functionality.
Yep. Fantastic. So we only got a couple minutes left here. I usually like to give people a few minutes to transition to their next meeting. So as a last kind of thought here, Dan, from you, what is your biggest prediction? What are you most interested in? What do you see coming next for the retail space?
I mean, this is the area that I'm kind of bullish about right now. I think we spoke about crypto. I truly believe that we have to. I think it's going to hit that as soon as the interest rate hikes kind of taper off. I think you're going to see a pleasant time for crypto, right? So it's a great opportunity, and we see a lot of amazing offerings that are being built right now on us and on other competitors of ours that are very, very, true to the cause, supporting retail. So I'm very, very bullish of what's happening, what will happen to the crypto space, number one. And I think it's the responsibility of firms like us to do what we always do, and that is to be honest, to be transparent, and always look out and do good for the customer, right? So that's kind of the heart of it.
Yeah.
Then the other area that I'm kind of very, very fascinated is the internationalization of the brokerage market. I think all of us will have to deal with the fact that we're going to dealing with a different kind of a customer, the geopolitical flavors that come into it. So that's kind of on another horizon. And the last thing that I wanted to say this because this whole thing we saw about meme stock rallies and GameStop and AMC and all this stuff, right? And I said this a couple of years ago. Though that'll taper off, by the way, it will taper off, right? You're going to see once in a while a bounce here and there. But if you think about the number of meme stock rallies we had in 2020, 2021, now in 2022, it's not that much. And very soon, it's not going to be that much because of one simple reason, and that is the sophistication these tool providers bring to the market, the education they bring, and the graduation that these customers are going through. So what is fascinating to me is basically the graduation effect that is rapidly occurring in the market. We are going to have a situation in 2023 where we're going to have an extremely sophisticated, not professional, extremely sophisticated, almost professional retail customer in large numbers dealing with crypto, and enabled by these hundreds of these platform providers. So certainly an exciting time.
That is a crazy and exciting picture to paint. So thank you for doing that for us. I think if there's one thing we've learned today, it's not to underestimate this new wave of sophisticated retail traders and all of the platforms and apps and tools that are popping up for them. So it's going to be an exciting future to watch unfold. Thanks for helping paint a picture of it today, Dan. It's always wonderful to chat with you. Appreciate you joining us. And thanks everybody who hopped into our webinar. We're going to keep doing these. We'll have lots of fireside chats with CEOs about topics like this. So pay attention, follow Tradier, follow Intrinio, and we will look forward to seeing you guys next time.
Thanks, Rachel. Thanks, everybody.
Thanks, Dan. Have a good day, everyone.
Bye-bye.